Welcome back to Market Mindset Podcast. I'm Big Money Mike, here to break down the stock market insanity, so you don't have to. Today, we're covering Apple's earnings surprise, a trucking company making bank off the U.S. Postal Service, and a financial firm that's trying to claw its way back from the abyss. Oh, and don't forget our stock pick of the week. It's not flashy, but it's delivering the goods. Let's dive in. All right, let's start with the market's favorite trillion-dollar tech giant, Apple APL. Apple just reported earnings, and Wall Street had a full-on mood swing. Heading into the report, the vibe was doomed. iPhone sales were supposedly tanking, China was supposedly a disaster, and Apple Intelligence was supposedly a letdown. But surprise, revenue hit $124.3 billion, up 10% from last year, and earnings per share beat expectations. So what's the secret sauce? Well, Apple's services division is an absolute money-printing machine. Revenue from things like the App Store, iCloud, and Apple Music jumped 14%, hitting an all-time high. That's massive because services have a 75% profit margin, which is double the margin on hardware. The big weak spot, China. Sales there fell 11%, thanks to competition from Xiaomi and Huawei, plus the government dragging its feet on approving Apple's AI features. But Apple is still optimistic about future stimulus policies from China helping out. Takeaway: Apple's still Apple. The iPhone cycle is slowing, but they're making up for it with software and services. And when you've got 2.35 billion active devices in circulation, you'll always have an audience willing to pay for a subscription. Next up, Oshkosh Corporation, OSK, the heavy-duty vehicle maker that just pulled off a solid quarter. Revenue jumped 6% to $2.62 billion, and earnings per share crushed expectations at $2.58. But the real headline here? Oshkosh has officially started ramping up production of its next-generation delivery vehicles, NGDV, for the U.S. Postal Service. These aren't just any trucks. These are EV-powered, climate-controlled, high-tech postal vans built to replace those ancient gas-guzzling delivery trucks. Postal carriers love them, and Oshkosh is expecting full-scale production this year. But here's the kicker. Oshkosh isn't just a postal truck company. They also dominate in construction and defense vehicles, and their vocational segment saw a 19.8% revenue jump. Their defense segment struggled a bit, but overall, they're raising dividends by 11%, which is always a bullish sign. Takeaway: Oshkosh is making big moves in EVs and infrastructure, and if the government keeps throwing money at modernization, they're in a great position. Now let's talk about Flagstar Financial, FLG, a company that's basically in financial survival mode. They reported a $160 million loss in Q4, but here's the twist: it was better than expected. Analysts were bracing for a much worse result, so Flagstar actually beat expectations by losing less money. Their problem? Commercial real estate exposure is killing them. Their multifamily loan portfolio dropped by $3.2 billion, and they had to set aside $108 million for potential bad loans. But there's a silver lining. Flagstar has been slashing costs and selling off non-core assets, which helped stabilize things. Their capital reserves actually improved, and they're making a big push into high-net-worth banking. Takeaway: if the real estate market stabilizes, Flagstar could pull off a comeback. But if interest rates stay high, they'll be treading water for a while. All right, time for our stock pick of the week, Celestica, CLS. You probably haven't heard much about Celestica, but here's why it's worth a look. Earnings blowout. Q4 revenue hit $2.06 billion, up 13% year-over-year. AI boom beneficiary. They supply high-performance servers and cloud infrastructure, meaning they're riding the AI wave without the same volatility as NVIDIA. Strong fundamentals, profit margins are expanding, and they're growing faster than many bigger-name tech stocks. The best part: Celestica's stock isn't overhyped yet. While everyone is fixated on AI chipmakers, Celestica is quietly winning in cloud computing hardware. Takeaway: this stock has momentum and strong earnings growth without the insane valuations of other tech players. Worth keeping an eye on. And that's a wrap for today's Market Mindset AI. We covered Apple's unexpected earnings win, Oshkosh's USPS truck boom, Flagstar's fight for survival, and a stock pick that might just be the sleeper hit of the AI infrastructure boom. Thanks for tuning in. Stay sharp, stay informed, and most importantly, stay in the mindset. This is Big Money Mike, signing off. See you next time.